Good afternoon, everyone. Can you hear me okay? Welcome, Essentials Room. So, just to let you know, this isn't about trading today, and that's good. I don't like rotation days where you're not sure what is going to go up first. So, just keep that in mind. We were long some things, short some things. We came out ahead, but I don't like rotation days. As you see, advanced declines are crappy. So, if you're not in the right stocks, and you're short the indexes, you're not going to make money today. Well, the odds are you aren't, but that's not what we're here for. What we're here for is to show some good trades and some bad trades and some examples. So this is what I wanted to show you. So we're going to go back into here. I'm telling you, when you have this choppiness in here and it's aggravating for you, the best thing is to go back and wait for your pitch. Now, I know that's hard because you're here all day, but I'll show you some examples. Oh, this is Meta. This is on August 10th. So you're going to see in here that Meta, and let me get it up here, August 9th and 10th. So I'm going to show you two different trades and when they worked and when they didn't. So the first thing in here is this triangle. So this triangle right here. So I did a chart on our for the Chart Patterns Mastery. I put out charts 3 times a week about respect the break in either direction. So what happened? A lot of times you get a sell-off and it comes back to back test it. But, and I make this mistake all the time. So I don't wait for the reversal candle. So just so you know, I don't look at the SPY sentiment on StockTwits anymore. It just doesn't seem to work. But this is going in today about what trades have worked and which haven't. So the first thing is, what was I doing in Meta? Well, you see on how it broke. This is August 10th. I'm going backwards on demand up here. So going backwards in here. So what I'm looking at is this. So back here, I'm just telling you, I messed it up and then we made money on it. I'll show you how we lost and how we made. So this was with stock, and then I'll show you one where we used options. So here is that breakdown right there. I mean, clear as day. Look at all those prior bottoms. And a lot of times you come back to back tests like that one. That one worked great. So we went back to the well. And this is what we did on a 1-minute chart. Just look right here. It's painful to look at. That's Thursday morning. Now, keep in mind, a lot of times if I'm on the option room or the Chart Patterns Mastery or in here, I have a habit of trying to find you a trade real quick and they haven't developed. So I'll just show you what we did wrong and what we then did right. So you go back into here and we're going to go on a 1-minute chart. There. So this is Thursday. Now keep in mind, I'm showing this on the left. I'm going to take off all the indexes. We're not looking at that. We're looking at this. So you see on how it broke down here, and that was fine. We did well. But what do you notice on every one of these breakdowns? You get a reversal candle. So what did I do? I shorted right here saying, hey, it's against the resistance right here. So I shorted right here saying it's against the resistance right there. So it got over the resistance. I got stopped right here. We lost a point because it got over the resistance and I just stopped myself out and I stopped it out for everybody on the chat. We lost a point on the stock, but you don't give up because when something is at the resistance area, that doesn't mean to blindly short. What it means is to look for the reversal pattern, even back here. So on that day, back here, that was at 2:15 on the 9th, right here. So we can go back one day and I'll just show you the for instance. So we're going to go back to here in a 1-minute chart. And you're going to see that 2:15, there, it got up to the resistance. Heck, maybe you missed that. See the resistance? But then you had the bear flag within the resistance. Same thing as the next day. You short too early, you get yourself stuck. You got to wait for the reversal pattern. So now fast forward to August 10th. So we're going to go back into this. I'm telling you that a lot of these extremely active stocks, even if they're $300 stocks, they have definable patterns intraday, real definable. So let's go back into it. So I shorted here. So it's over the ATR trailing stop. I had not even one reason to short it, except it was near resistance. I like that 3 reasons. Well, you see what happened. Well, this right here is called, I've dubbed 3 marching lemmings. It's when you have successive highs, but successive lows on the MACD. The problem with that can be a hindsight reading, but still it worked. So you had the successive lows and the successive highs. That's a big warning sign. But that wasn't the point. The point is to wait for this. Either you wait for this one or you wait for this one. So what happened? We didn't short here. It was still above the resistance. We shorted here. So we lost a point this way. So we got stopped out. But then we had 3 reasons. So you had the resistance. It was back under it. It had a bear flag and it had like a top. You could see the top. So what happened? We shorted the second one and we never got out till here. Actually, we stayed in a little longer. Yeah, we stayed in. Well, we got out here, right in that area. You could get out here, but that's 2 points when 2.5 points when before you only lost a point. So the whole moral of the story is you've got to wait if it's at support or resistance for that reversal candle. I mean, that's what you have to do. And that's what we did. So one of them worked, one of them didn't. And the one that had 3 reasons worked, as you see. And that was with stock. So let me show you a couple more. Well, the one that happened September 8th. So now you see that. Meta has a habit of forming real identifiable bear flags, especially when it's at resistance. Now, believe it or not, you see it's 305.74. That's on August 10th. Right now, it's 305.71. That's sort of amazing. It's the same price. So it's not, now it's at purgatory. It doesn't look like anything. It's not at resistance, doesn't have a bear flag, doesn't have a bull flag. And that's where we are right now. So going back to September 8th. Now I'm trying to go fast because I don't want it to, I don't want to run out of time. This is all of a half hour. So this is the next one. This is a beautiful thing right here. So here we go again. On the opening, yeah, you heard that again. But I was betting on the open interest at 300. So this is the thing. This is on a Friday. Stocks have a tendency to go to their open interest. So you go into here on the open interest, and you'll see on the day of expiration, the biggest open interest was 300. That's where the spread traders need to unwind. I like evenly dispersed. So you got 7,000 and 15,000. It's not perfect, but it's better than any other strike. This one had 10,086. That's nothing. 9,000 and 1,400. Not good enough. 15,000 and 7,000. So our theory was it was going to go back to the strike price. There were a number of stocks that had that. But you had to wait for your signal. So you go back to here. So what did we do? Well, we bought a butterfly, betting on it going to 300 right here. So we were gagging on it. So I told everyone this is a B minus trade. But the second it formed that, it became an A trade. So we bought the 300 put fly at $1.55. It went immediately to $1.45. Then when I saw this, you could just load up in more. You could sell calls, you could buy puts, or just stay in what we were in. The thing we bought at $1.55, we sold at, we bought it at $1.56. In fact, this is the actual order. I was actually sending it to Trader TV as an example. So I want to show you what we're talking about. Let's see if it works. Yeah, there you go. So I sent it to them, combining that with what we did. So you're going to see it was a good trade. Let me press enter. There. Did we get the perfect trade? No. Is it, I mean, because we didn't short stock or just buying out of the money put. But the moral of the story is you still made $1 on a $1.56 butterfly. So all you're doing is you were betting on it going to 300. Sort of betting on it going to 300. And if you didn't want to buy puts, now you might say, why didn't you just buy puts? Because if I was wrong, the out of the money puts would have gotten destroyed. So if you buy puts right here, you probably would have been stuck, gave up here. But if I buy a cheap spread, betting on that, and then you see that pattern, yeah, you had more staying power. So ironically, this looks like back on August 8th. Let me be sure I have the right day. There. What do you see the same? Yeah, you got under the ATR trailing stop and you had a bear flag. Now, there were even more of them. That's not even the one we were looking at. The one we were looking at is the one that had really overshot. So that was August 10th. And you're going to see it has the same darn pattern. There you go. Where it went up straight up like it did September 8th. Then it formed the bear flag. So we just did stock here, but the same darn thing. You could have gone and done a spread under the market. So this is not where you do it. You do it when it forms this. And that's why this ATR trailing stop is so important, because at the minimum, it shows you the trend. So, and you see the bear flags. So going back to September 8th, you see the same thing. The rally, and then the cross, and then the bear flag. So it worked. Now, there were other ones that day, and that becomes another thing about feel. So the thing about feel is if this is doing this, let's say it's up here. So just take that at 10 o'clock. And similar crazy stocks that have open interest underneath are already breaking, then this is more likely to work. So let's go put in, I only did one. Now let's go put in the Tesla on a 1 minute. Now we can go and just put this right here at 10:30. So there you go. There's Tesla 10:30. So let me put it in here. Be sure I'm doing it right. Yeah. So you see right here, you're still not sure. Remember, we did it back here. So if you were in puts, you probably would have given up. Instead, we stayed in. But what you're noticing in here is already Tesla is far under here. So let's go into 11. Let's see if one went down before the other. This 11:30. So look what happened down here. And Tesla had something and broke right there. So it broke at 10:36. Just keep in mind, 10:36. This broke right in the same area. So you got a little more. You see, they had similar patterns and they already were forming bearish patterns. So I went with the one with the tighter pattern, Also, it has tighter spreads on the options. So that's why I went with Meta. Now, there were a number of other ones that day, not Apple. I wasn't going for Apple. The open interest was above the market, not below. How about Google? Nope. The open interest, it just didn't have the same structure. So you want to find the same structure, and you see the same structure there. So that's where we were. That's why it worked okay. So that was the one we did. Now, when it comes to other days, you're going to see that Meta is amazing that it has these all the time. And you got to wait for those. Does it have it today? No, it doesn't have a thing. So if you wanted to play toward 300, you just don't have enough reasons. There just isn't a reason. So, look at this with Google on the left and Meta on the right. You don't have any reason to play it on the downside. So now you might say, well, how about the day before it got to 307 or this morning? You're going to see at least you can draw some kind of trend line. Some kind of trend line. I mean, if you're betting on it going to a strike, it works a lot better on expiration day of that strike price play. But the point is you got to wait for that, and you don't have that. So today is not the day to screw around. Now you might be like, well, how about back here? Well, yeah, you could have done there. Definitely could have done there this morning. But the biggest difference is that this formed over the ATR trailing stop. There was one here. Sure, you could have done that. But those are what you have to wait for. You got to wait for it to lose its momentum. And so you see when to do it and when not to. That's all I wanted to show you. And it worked pretty well. So that's pretty cool. So just want to show you that. Now on the long side, like today, what looked good? Well, everything sort of looked lethargic. That's a good way to get yourself in trouble when something looks like it won't go up relative to the markets, but then it slowly goes up. So if you don't have an identifiable pattern, you don't have to trade it. On the other hand, look at this on the left. There's your identifiable pattern. So it's over the ATR trailing stop, and then it was a bull flag at resistance. Now, this isn't great because it doesn't move that much, but I just wanted to show you an example of today of what was happening. So I hope that helps. But so is there anything else that's just showing you got to do something today? Well, not really. I'm not seeing it. I'm seeing that the markets are slowly going up. Not great, but they're going up. So just keep that in mind that this is the type of day, believe it or not, I don't like. So what do I mean by that? I don't like when it grinds up. So you see in here, the second the QQQ, right here, right now. Yeah, that's a song, I think. Down tick 20 cents. 20 cents, that's it. Meta just went down 70 cents. That's what I'm telling you. It's not, it's too choppy and it just gets you nervous. I mean, that's what happens. So does it look like you should play it on the short side? Absolutely not. But does it have reasons to buy it? Not really. So that's the problem with today is every little downtick, things go down fast. But that doesn't mean to short. It just means you keep getting stopped out on longs. So let's find some other stocks, see if there are any layups up or down. I'm just going to put it nice and big, like Apple. What the heck do you do with that? That's slop. So now you might say, well, here was a bull flag. That measures all of 20 cents. It's not worth it. So there was a bear flag. That measured all of 60 cents. They're just not there. That's why in Apple, it wasn't there to do that kind of trade. So are there other ones? Well, let's go over them because I love doing this. So we're going to put my main list and put the crazy ones. It's easier to graphically show them. Even though some of the main list is really thin markets, it's a good example. How about Lulu? Let's put that in there. See all the dots and dashes? That means it's not as liquid. But I like using it for examples. So how about lamb? Dots and dashes, but look at it now. That doesn't tell you a darn thing. But if a chip is going up, can you play a more liquid one like AMD? Well, yeah, there was one. Here was a bear flag. And then here was some bull flags. They still weren't that tight. Now's a more tight bull flag. But these were sloppy. That's what I'm telling you. How about Lily on the downside? No, that was sloppy. How about Service Now? Not all these grinds up are always tough because a lot of times when it goes that slow, the ATR trailing stop I use gets too tight and you get stopped on the way up. This is the type of day I usually back away. So just want to show you that. So what do you do now? Well, what do you do with NVIDIA? Well, number one, because that's like a huge tell and a crazy stock that gives you some examples of what to do. What I mean by that is if you go to like a 4-hour chart. So you look at the big picture. So one thing, is that a bear flag? Well, it's so close to support, it's really not worth the risk reward on a $400 stock. So this, here we go. Here's exactly like Facebook or Meta. Sorry about that. Is you had a big reversal candle. You had a test to the highs, but you don't want to just blindly short at resistance. You want to wait for a reversal candle. That would be there. Unfortunately, on the opening. So you don't play the opening, you play the consolidation. So let's go to that day. So that day is right here. So that day is on September 1st, 9 a.m. All right. You see that it's reversing. You can see that here, which means, you know, in hindsight, it sounds great to short right there, but you don't know if it's going to a new high. You want to get the direction right and not care about the price. So let's see if it gave you a good tell intraday. Well, I think you see it a mile away. So not this one, this one right there. Is it hard to short it at 488 when it was just 498? Yeah, it's hard. But that was good for about 5 points. And what's interesting is if you put that on a 5-minute, what does that measure? That measures from there, which is about 500 to here. Now that's 16 points. Where did it end up going? So a lot of bull and bear flags are consolidation patterns. So where did it go? Well, let's see where it went. So theoretically, without me showing you, if it breaks, it's not like Apple today that you make 30 cents. This measures 16 points. So let's go now to the end of the day. So the hard thing in here, and this is why money management matters. Let's say right here you shorted 50 shares. Or let's say you just bought options, but let's just say stock for argument's sake. So when it breaks, you're like, hey, it got to this low. I'm up right here about 4 points. I'm going to buy back half. That way you're playing with house money. What I mean by that is if you shorted at 488 and you made 4 points, then your stop could be up at these candles on the rest, and now you're up. You'll still be up money for the day, but you can let it try to run. So, which brings me to the next thing on a extremely volatile stock. I'll use a 20 simple and the ATR trailing stop. And I'll usually use a 1 minute, but I wanted to show you just for display things of where this could go. So we're going to go to the end of the day. Now, keep in mind, if you had shorted stock and you bought back half, now you're playing with the house money. And now you're stubbornly saying it's going to go down by that amount. So, but you're playing with house money. So let's see what happened by 12:35. I mean, I know what happened, but I'll show you. Nothing yet, but you're not stopped out. So you're still in it. So you're still in half, and look what's forming. A little rectangle. Now, this is where this ATR trailing stop, usually what I do is if I make a quick 4 points, I'll go to a 5 minute so I don't get stopped out too quick. Or I'll just play it by getting out here. Remember, we shorted here. You get out if it crosses, then you could get back in but I like identifiable patterns or measuring patterns. So if I made that 4.5 points, then I'm not getting out till it gets back up here. So you're still in it. It's now a rectangle. Now let's go to the next hour. Yeah, I hope you see that rectangle. It's morphing into a rectangle. But if I make 4.5 points, I usually go to a 5 minute then. So then I let something ride so I don't get wiggled out. So let's go to 13:35. You would have gotten stopped. Fine. So you make 2 points on the second amount and you made 4 points on the first amount. The problem is it went a lot lower. And if it wasn't today, it'd be the next day. So right now it just futzed around. So it had that bear flag. Believe it or not, it got you out in here. And now it's sort of forming something like this. But it wasn't today. We already know that it reversed from a resistance. It had a bear flag and it just didn't go down anymore. Well, what happened the next day? Well, that's expiration. It stopped at the strike price. How about on Tuesday? Still nothing. Well, it hasn't, it's pre-buffering. But eventually I'll show you what it did because it was ugly. It still didn't do anything. So, but on an hourly, you'll see it couldn't get out of its own way. Couldn't get back above resistance. And then watch what happens in the next couple of days. Yeah, there you go. So it got destroyed. You just had to stay with it. In fact, if you made that money here and then you stayed out, look what developed. Another bear flag. Not that one. That's the gap. That's hindsight. That one. That's what I was showing you. So, like I said, I don't like doing breakdowns or breakups exactly on the opening. You get whipped out. I'd rather do it here, like at 10 o'clock while it developed. So I hope that makes sense of, I want to do it by how it works off an overbought or a identifiable pattern, and then using money management to play with house money. So I hope that helped on how we did it. The red line right now is not. I didn't change it. And the only reason I have the 20 simple, now I'll show you why, is if something moves a lot, then the ATR trailing stop gets too far from the price. So I like to have both. So here you see it's whippy. There you go again. I don't want to mess with the opening. But a lot of times I'll use that the 20. In fact, the day before was a better example. You're going to get stopped a lot when you trade a volatile stock. But right here. So if you were playing in here, the ATR trailing stops all the way there, but the 20's down here. So you would have gotten stopped on your short there. I mean, that's a lot. That's 5 points. So that's how I do it. I hope that that helps. So let me show you this also before I go. So this is my short-term trading chart. So I'll just show you 1 minute. You see today, what now you see why you'd be uptight. Look how many times you would have gotten chopped around. That's tough. I mean, that's, almost impossible. In hindsight, sure, somebody's going to say, yeah, I bought it down here. That's not that easy. I look for identifiable patterns. But let me share this grid with you. And I'm hoping this works on the other side too. There, that's a 1 minute grid. Now, let me just tell you, it's a great question on the YouTube streaming. I'll get to that in a second. Here you go. Paste. So in the YouTube streaming, it was asked, do you wait till after the opening? Let me just tell you. So I'm on a lot the first half hour. And I can't tell you how many times I screw around by messing around in here. Now, there's money to be made, don't get me wrong, but I like to wait, unfortunately, till I'm off, like at 10 o'clock. Because look at that. I just think that's a lot more identifiable pattern than up here. This might be a bull flag, but that's pretty sloppy. So I like to wait till at least a half hour, unless it's something like this, because it's a good question. Let's say something closes on its absolute low and it opens up because the market opened up. A lot of times that stock will test the low. But here we go again. You'd rather not have an opinion and you'd rather have an identifiable pattern. So I'll give you an example of that. Not today, not today. Oh, sorry, the opposite. This is the opposite. Sorry. It closed on its absolute high that day. So it opened down. It opened down because of, I think it was NVIDIA. And then it came back to test the high. It works both ways. So you might, but why didn't I trade this? One, it's sort of a liquid, and you didn't really have that identifiable pattern. But that's the time I'd play near the opening, is if you get that kind of sell off because of other factors. So it's a good question. So everybody take care. Thanks for being with me. I hope that helps. And definitely, I mean, I can show you today because it really makes me uptight when I don't see identifiable patterns. I just don't see them. That's too thin. So if we take the most active that we play, that doesn't show me an identifiable. That is too sloppy. How about Tesla? Well, let me just tell you, we made money. I did some butterflies for people in the room, in the Chart Patterns Mastery. We lost money in them, but we shorted Tesla on this break. Right there. That little break. Yep, we waited till 10 o'clock. Did I short it up here? No, I waited for an identifiable pattern. So we made boom, and we got out when it filled the gap. So that's how we made money in there. So we waited for that after the opening. But now you got me on what to do. And I'm on the options room between 3 and 4 and dually broadcasted with the Chart Patterns Mastery. And I have my work to do of what I think's going to happen and if I have reasons to back it up. So just keep that in mind, and I will talk to you later.